Credit cards with Carter, the triple C advantage on today's show.
It's Brian Preston, the money guy.
So here's the thing. You hang out with the money guys long enough, you're going to realize it's not just Brian and Bo that are financial mutants. We have a whole bench of financial mutants that we work here with at Abound Wealth. And I don't know if this is we attract this type of personality. Carter, you'll have to let us know if we've sculpted you into this financial mutant. But we are going to do a show specifically on credit cards. And this is how this show came to be. We have a lot of discussion at the office about all financial matters. And Carter always seems to know which credit card to use if you're a travel rewards person, if you're a cash back person, if you need to know about what insurance protection does this card offer, foreign transaction fees, this is your guy. So we wanted to make sure that we shared that knowledge. Plus, a lot of you guys, when you reach out to us and want to take the relationship to the next level, you work with the whole team because we have a very collaborative experience at Abound Wealth. So I felt like it made complete sense to not just let you help us out with show notes, Carter. We're just going to throw you out here and let the whole Money Guy family get to meet you. So welcome.
My first experience on the podcast, you guys brought me in. I had a costume on, and you made me try these jelly beans. I didn't know what they were, so hopefully this one goes just a little bit better than that.
The Bean Boozled Challenge. By the way, if you have not gone on YouTube and looked at, because the audio is nice, but the visual is incredible. Our special Halloween episode where I was Howard Stern as Jon Snow, and then Bo was Puff the Magic Dragon.
That's right.
And you were
like an iced man.
He was one of the bad guys from the show.
God, you can tell none of you guys watch Game of Thrones. I mean, that is just horrible.
Khaleesi.
No,
is that not right?
Go check it out on. By the way, YouTube. Over the last 2.5 months, we've had over 100,000 views. And by the way, it's picking up steam. Yep. So thank you. Go check it out. And then here's another cool thing. If you haven't been to moneyguy.com, I just placed an order for something that you guys are going to be the direct beneficiary out of. And also, we have a giveaway that we're going to be doing based upon the 30-minute financial plan. If y'all remember, that was one of our most popular shows we've ever done. We've actually got spreadsheets and links and other things that are going to be built into this actionable course that for a short period of time, because we're cutting our teeth, it's going to be free, but free with just your email address. So make sure you share your email address with us so we can get all that and you can get access to all these things that we're coming down the pipe with.
So I know this is coming up, Brian, and you're going to mention this, but I think we ought to just fast forward to the very front of the show, right? So we're talking about credit cards today. Is there an appropriate disclaimer that we might want to throw on at the beginning so we keep everyone happy who's going to already got their fingers itching for the hate mail right now?
We're going to blame Carter for all things that go wrong today. No pressure, Carter. But it is one of those, and I think that's a good thing to put the disclaimer on the front end, is that we have quite a few friends in the financial, community that are 100% no credit card,
that's right,
all debt free all the time. And I respect that. I really do. I have no problem with it. We kind of wanted to go more of an approach where we show you, yes, credit cards are dangerous. I think you have to treat them like a tool that has a point and a very sharp edge. But it is a tool that if you know how to use it appropriately, and at least if somebody could tell you from a neutral standpoint the pros and cons, you could figure out if this is something that's best right for you. And here's the great thing about this show today. We're not only going to tell you how to maximize credit cards, we're going to tell you cautionary tales of things you need to be careful of, as well as things you need to recognize in yourself that if you show some type of compulsion, if you show lack of discipline, you probably just need to avoid them. Yeah. I mean, I don't mind telling people, avoid this tool if you can't be responsible and healthy with it. And we're going to try to give you some coping tools as well as checklists you can do to make sure that you are on the right path with these things. Sure. Because, and that's a great intro, Bo, because I do want to make sure I'm clear with everyone on this. We are wealth managers. Our day job is we're fee-only financial planners. This started out as a hobby, meaning we were financial advisors by our day jobs, but then we were podcasting just to try to spread education and the good news of great financial management. But one of the things I quickly noticed is that we work with a lot of successful people, and successful people don't have credit problems. They don't have debt problems. So if you find that you are a person that is having trouble getting traction to building financial independence, and a lot of that is because you keep getting leverage, you have a big mortgage, you have credit cards, you have student loans, you might need to take a step back and go, what am I doing differently than all the benchmark people who are super successful? Right. So that's the disclaimer I'll put in on the front end. Did you have anything you wanted to add on it?
No. I thought that was spot on, and we have a ton to get through today, so I think we should let's jump right in.
Yeah, we need to hit the accelerator. I first want to do kind of an overview because credit cards, and you kind of stumped me a little bit, Carter, when we were looking at this. Is I thought Diner Club was kind of one of the first credit cards. Can you kind of walk us through the history of credit cards?
Well, and I thought the same thing too, and so I did a little bit more research. And actually, the first credit card that was made was for farmers who went into the general store and they needed a way to keep track of their accounts. So say Bo goes in from his farm to the store to buy seed, whatever.
Farmer Bo.
They wrote on a piece of cardboard, they would write your account number, your address down, so you knew what you were liable for going forward. So that was actually the first iteration of credit cards. And then after that, Diners Club was the first universal card.
Okay.
But prior to that, Sears had a card that they had for customers that shop there, on a consistent basis, where they would extend credit to for that. But
that was right around the 1900s.
Yeah, it was early
so.
1900s, yeah.
Really?
And then Diners Club was, what was it, mid-1950s?
1950s, yeah. Wow. Which is pretty close to when Amex
And then that's when the big boy came in, Amex, which still kind of dominates. And back then, tell me this, like Amex and others, you were expected to pay them off every month. I mean, I don't believe that it immediately extended
credit. It was like
credit.
a carrying over type deal?
Yeah, I mean, it extended credit for a short period of time, but this whole thing of interest bearing for months on months, I don't think that that's something that these things originally started out with. I think this was more of a convenience.
Definitely.
So, I also had some interesting facts that you had kind of shared with me, and I think it was worthwhile that we ought to share them with our audience. You said that there are 1.63 billion credit cards.
Yeah, which I didn't believe that either. So I'm the guy that, tried to utilize the travel points and the cash back, but I hadn't really gone through the history. Well, 1.6 billion and 800 million of those credit cards are held by Visa alone.
Wow.
800 million.
Now, and then you told me a cool stat. What happens if you stacked all those or wrapped them around the earth?
It would wrap, each card lined up side by side would wrap around the earth 3.5 times.
Now, I want to know who is the person that figured that out. I guess it's not that complicated.
Really
you figure out what the circumference of the earth is, and then you measure the card.
I hope that person's a huge Money Guy fan. We'll get an email. Hey, I was the guy. I was the credit card earth wrap guy.
The other thing I thought, you gave me a link when we were doing some show prep and talking about this. You sent me a link talking about how your credit score and how good you are with your credit also gave indications to how likely you are to be successful in love.
Huh.
And it's true.
It is.
So give some of the reasons that why people who are good with credit are also great with. I feel like we ought to be on the Newlywed Show. I could just say the word whoopee, but why are people who are good with credit?
It's a discipline thing, which I know if my wife's watching, it's it is what it is. But it's a discipline thing. So people who are more disciplined are also more disciplined with their relationships, with their money, with their personal relationships. So I think that was the biggest key, from what I read.
And it's trustworthy. You're also more trustworthy, and that's what. Here's the thing we tell people, and this is. When I talk to my no debt friends, one of the key things that I always am nervous about, I think I'm at the age now with debt and other things, I don't really need a ton of credit.
Sure.
But let's face it, in your 20s and your 30s, you kind of need credit because you're hoping that you get to buy the house. You get to, set everything up in the beginning. And so much of your life now is driven by your credit score. Your property and casualty rates, your auto insurance rates. I mean, when you go to set up utilities for your house, what's the first thing they ask for? Is they want your social security number so they can figure out do you have to make a deposit or not. So that trustworthiness not only translates into, your utilities and your health, your car insurance rates. It also translates into, how much your spouse is going to love you. It sounds like based upon the research. And let's face it, What is one of the biggest things that people fight over in marriage?
I think it's money. I think finances are probably one of the very top things. Yeah.
Tying into what Carter said, a disciplined person who's good with money, you're probably not fighting about money as much as you would be if you didn't. And then the last crazy point or interesting point I want to throw out is you found some nut job out there, Carter, who has 1,496 credit cards. No, that's a sickness. Come on. Anybody who has I thought I was bad. I mean, because I could pull out my wallet and I could count off probably 7 cards.
Right.
This guy has 1,496. That's not normal. I'm not normal, and this guy has a lot more.
If you have that many cards, how much money is at his disposal? How much does he have access to?
He said active 1.7 million in credit line. So these cards, not only did he have 1,500 cards, every single one of those cards was active with a credit line.
I bet his utilization rate was low.
You would think.
You would hope so, at least.
That's nerd humor. Did you see how y'all all laughed? That is hilarious. So let's talk about the pros and cons of credit cards, because we have a ton to cover. I mean, when I look at this, I'm like, Carter, man, you shared the love, so we got to keep cranking here. Pros of credit cards. I want to kind of go through these, and then Carter, you feel free to throw some color on here. Bo, you as well.
Absolutely.
First thing I liked was extended warranty.
Yep.
You know, I have actually utilized this, as most people don't realize. Special cards, I know like Visa signatures and others, will usually give you an extra year warranty over the warranty that comes with the
Whatever
item.
major purchase.
And I know like Costco, I think they'll give you 2 years on electronics and things that you buy with them, and Carter probably could add more, but the extended warranty is definitely a pro.
Mm-hmm.
Price protection. A lot of, I have a lot of consumer fear that when I buy something, I'm not getting the best price. I know, it surprises you.
That's so true.
It's a disorder that it's actually very profitable. And, but this price protection, a lot of your credit cards will actually give you some price protection where they'll do a price match policy, or you can go in and log it in. Travel insurance. Carter, talk to me about this, because we figured out, you shared something with me. We have always heard for years that if you do your travel transaction like a rental car with your Visa card, or credit card, that you automatically get rental car insurance. But there's some big caveats on that. Walk people through what you have to make sure and kind of what's out there right now.
So the first major thing is you need to make sure the card that has the rental coverage on it is the card you use to book the car.
Okay.
Right.
Should be common sense, but
Worth mentioning,
maybe
for
not.
sure.
If you have multiple cards, you might forget. So that's number one. 2, if you have primary insurance for your auto, on the side, using your card does not bypass your primary insurance.
So it's a secondary too.
It's a secondary. I kind of called it the umbrella.
But it's the language in the credit card that makes it secondary, right? Because it pushes it back on your homeowners and auto insurance.
That's
policy.
right. So there are primary cards that offer primary insurance, and then there's secondary cards, just to make everything more confusing. So be sure to read the fine print of the credit card, inquiry of whether or not it's primary. Primary will cover collision and some liability potentially. Secondary, you have to go back to your original, and then it comes back, and it'll even cover deductibles on your primary.
So
as well.
here's what I want to do, because I want to encourage everybody to either listen to the YouTube channel, go out to YouTube, or go to the moneyguy.com website. There's actually, we can show, I know there was an article we were looking at, and maybe we can do a screenshot of cards that have primary, because that's a powerful thing. Because here's what happens if you let your homeowners or auto policy be your insurance for your rental cars. If you had an accident or something, that claim could count against your
Affect
insurance.
your rates,
It could impact your future rates with your automobile insurance. Whereas if you use a card that does a primary, some of the higher end cards do this now.
Usually
they have
a paid
language
card,
that makes your homeowners secondary and they are the primary. You don't run the risk. You don't have you don't run the risk. So that's a great value add. Travel insurance, if you lose luggage and other things, some of the premium cards will protect you on that. How about the foreign transaction fees? That's a big one. I know I just got a notification on the Costco that they've waived, that fee is gone as of January. So how does that work?
Foreign transaction fees are a baby in the industry for fee-paying cards for the most part. Now, we had a discussion before we had this, I was going to say call before we had the show, and we were talking about foreign transaction fees, and normally it comes with a paid card. So a $95 annual fee, $100 annual fee. However, There's now cards, because the competition in the space is getting better. They're dropping foreign transaction fees, and you see that with the Costco card. With I think the Uber Visa card now allows that as well for free, no foreign transaction fees. So traveling abroad, that's definitely something to think about.
The next one I think is getting to be more and more important. It seems like I'm bumping into this every 3 years, and is that we live in this new modern society where unfortunately hacking, fraud, identity theft is just a day-to-day part of our life.
Right.
And fraud protection with, credit cards is pretty good. I mean, because I know a lot of people, because you like the discipline side of things, you like debit cards.
Sure.
And banks are typically pretty good about reimbursing you, but there is a little bit of a float that you have to be able to have funds waiting for the bank to reimburse you. The good news is with a credit card is what is your exposure, Carter?
$50.
$50.
But here's the thing. They say $50. I know that's in all the paperwork. I have never had a credit card company make me pay that $50. They usually, in practice, waive that $50. Right. I mean, have y'all experienced this?
Yeah. Usually immediately, within a day or two.
And the other thing I like about credit cards is that my next door neighbor, I don't think he'll be mad that I share this story. One of the major rental car companies, he travels a lot for work. He dropped off his car, and the guy said, "Do you want your receipt?" And he was like, "No, I saw you scan it. We're good." And he didn't get the printed receipt.
Okay.
He gets a call from the rental car company, trying really hard not to say their name, 3 weeks later saying, "When are you going to bring the car back?" And he's like,
"I don't have the car.
What are you talking about? I turned that car in 3 weeks ago. So there's no car." So they take note. Oh, okay, well, we'll go find it. We'll track it down. So probably 4 days later, he gets an email from the same road. "When are you going to bring the car back? Because we're about to debit, pull off your credit card even more money." So he got into this big, long fight with this rental car company. You know how he finally solved this issue? He called his credit card and he said, "Look, I don't owe these people any money. Here's the dates I turned it in. Here's the dates of the transaction. This is what I should pay. This is what I have email confirmation of what I should have paid."
Right.
They, credit card company, took care of it, credited him back everything that they had automatically debited off of his credit card. And then he got a letter a week later or an email from the rental car company saying, "We're all good now."
Oh, nice.
So the credit card company can be your advocate for any transaction, and that's why usually you have a 60-day window after a transaction settles. So for travel or things you think are somewhat shady that you don't trust the person you're buying from, credit card is your best protection. Sure. So it helps you from the fraud protection that unfortunately we have to live with. Here's the two things kind of to close this out or kind of move things. Cashback. Uh-huh. We're going to get into in a minute how big cashback versus travel. Discounts. We have a show for you guys coming up. Just to tease more content coming. Called Shopping Ninja Skills.
Triple threat shopping.
That's right.
Ninja.
You got to put that.
You got to put the triple
with the
threat
triple
in
C. I like the Trinity obviously because triple threat, triple C's. I mean, we are tripling everything up here.
Killing
but we there's definitely discounts. And Carter, you gave me this. I want to give you credit because I don't know if I gave you credit in the upcoming episode. Cashbackmonitor.com.
It kind of blew my mind a little bit.
It's pretty unbelievable.
It's
isn't it?
nuts.
It's new to me. It was new to me as well in the past few months. It's unbelievable.
So cashbackmonitor.com, if you don't know, is a portal. When you type in cashbackmonitor.com and then you type in any of the online retailers you're thinking about looking at, they'll tell you the best place to go through because you might want to buy it through eBay. You might want to buy it through a credit card portal.
You promise.
You promise. Right. It's going to tell you the best portal to do it and get the best cash back or best reward. So definitely take advantage of that. Sign-on bonuses. Guys, this is another thing you need to be a little nervous about, but it can be very exciting. And Carter, you have some great, when we get into the travel discussion, we'll talk about these sign-on bonuses, but credit card companies are willing to pay you to become a customer. So that's definitely a benefit, and we'll talk about that. And then I thought this one was important. Credit building. What do you mean by credit building?
Credit building would be So I'll give the example. I told my wife I wouldn't give this example, but I'm going to do it anyway.
You know what makes great show content?
When they don't know
ticking
what's going.
off your wife. So let's keep it going. Keep it rolling.
So when we got married, she had 0 credit to her name.
Okay.
Not any credit. She had never had a student loan, a credit card, anything like that.
That's probably because her parents told her don't go get
That's
a
right.
bag of potato
That's
chips
right.
for the credit card in college.
So we went in and we were going to get her first credit card. Well, she got denied, right? And we went for one of the big boys.
Okay.
You know, one of the paid cards, Premier. You know, that's what we went for. Well, you have to have a great credit score to do that.
Yeah.
Well, me not even thinking about it because I have some good credit.
Right.
I was like, we'll just get you one. Denied. So credit building is key, and one of the ways you can build credit is with smaller cards, smaller utilizations on those cards, smaller credit lines. That's sort of what I was thinking through when I was thinking about credit building.
Sure.
I don't mean to put you on the spot, but I think, when did you get your first credit card?
I think I was a sophomore in college, because I kind of recognized that I was taking a class of financial planning, because that's sort of the way that it goes. I recognized pretty early on that I could go get a student credit card to start that. So mine was pretty early on.
When
Same
did you
experience.
I am more like your wife. In the fact that, y'all know, I grew up in a household where we didn't come from much money, but I have parents. Man, if they could have just met if Brian Preston would have been like baby boss, where I could have been giving advice to my parents when I was a baby, because they were so disciplined, so good with money, and the fact that we never had debt issues, saved a lot of cash, invested 0 though. They had no idea how to make money work. So we had this army of dollar bills that was just sitting around on their hands going, when are these people going to do something with us? But I remember my parents had me so scared of credit card debt. I didn't get a credit card in college. And I was just like your wife. I mean, I even got turned down. I'm not going to say the name because now I'm in good standing with them, but it was one of the big rebate cards. Starts with a D. And they totally denied me because I didn't build credit in college. And that's one of the things I do tell people, if you're in college, I'm not saying go get the bag of potato chips or a bag of potato chips each week, because that's what they will do in college. Sure. I think they've changed some of that with some of these fair credit practices. But when I was in college, you couldn't walk on a street corner and not have a credit card stand trying to get you to sign up. And they really were literally giving you a t-shirt or a bag of potato chips. I mean, it didn't matter, but they'd get you to sign up.
If you're a parent who has a young child, either high school age or college age, a lot of tendency is you add them as a user on your account and they get a card so they can put gas in their car or whatever. One thing to keep in mind is that doesn't always help them start establishing credit. So we always encourage folks, if you do have teenage children that you want to start this for, help them go open a card up in their own name, because just because they're added to your account as a user doesn't mean that they're establishing that credit history. That's a common misnomer that we see a lot of folks have. And
the college time frame of your life is when credit card companies are willing to take a chance on you, because they feel like your future is bright, plus they know mommy and daddy are probably your backstop. So get the credit, ease into the credit game while you're in college, because you're hearing these two guys did a credit card in college, were very responsible, had no credit problems. You built credit.
That's right. I
waited, and I basically had to kick, scream, claw to get my first credit card as well as my first car loan, because I didn't exist in the system. So pay attention to that. Let's talk about cons, because did we really rosy up those credit cards? So let's make sure we calm this thing down. Overspending.
Yeah.
I mean, Carter, did you, in your research, you're kind of an expert on this. What does it tell about people with overspending issues?
So, and I'm looking back at my notes, the average household credit card debt in 2016 was $16,000. And what that tells me,
people aren't paying that off.
That's what that's telling me. That's right. People are holding that balance, consistently month to month, and they're only paying the interest. They're not even paying down principal on that. So that just blew my mind. That overspending is a real issue.
And when you do that, all you're doing is you're borrowing from your future self. You're living today in your future self. I actually there's a podcast list. This is so crazy. He stopped by yesterday and he gave me this great line that I want to kind of regurgitate. And he said that rich people stay rich by acting poor.
That's true.
Poor people stay
scarcity
poor by acting rich. Isn't that interesting? I mean, that's not always the case, but that's really, so credit cards are a lot of the ways people get themselves in trouble is by falling into that consumption mentality of I gotta have, and they really leverage themselves and kind of dig into a hole.
What's the strategy? You kind of had listed it when we were talking about this, Carter. What's what do you do to make sure you don't fall into these problems with credit cards?
We use mint.com. So we have multiple credit cards in our family, not that many, but just a few. But to keep those in order, we use mint.com to make sure that we keep up on those credit cards. So before I make any, and if we go and buy coffee, I'm not looking at my bank account to make sure I have the cash to cover it. But every couple of days, day or two, I make sure that I have enough money in my bank account to cover any purchases that I'm going to make on my credit card. I made the point in the notes that it doesn't matter if it is the MacBook that you're going out and buying or if it is the $50, dinner. You want to make sure that you have the money, because if you don't, one dinner turns into two dinners and that turns into a couple $100, and you're, it's just a roll effect.
Yeah.
And we're going to talk about more safeguard strategies in a minute, but I do think that one of the fears or concerns, and this is why my parents tried to scare me about credit card debt, is I think that you get to a certain age and you do look around at your peers and you go, man, this consumer society we live in, there are a lot of strategies out there to help you part with your money.
That's right.
And one of them is this compulsion to make everything seem like it's accessible.
That's right.
I mean, every store you go into a mall, you go into any retailer, and it doesn't matter how big, how small, they'll offer you a discount to get you to sign up for a store credit card. How often when you watch TV at night, and maybe this is because we're in the South, but you see people banging on car hoods telling you zero money, zero credit. You could have fallen off the credit wagon last week. We'll sell you a car. I mean, that is all the stuff that is going on all around us. So you need to ask yourself, am I one of the people that's subjected to that stuff? Because I think that if you were we have a show we have not recorded. I've had it sitting in the hopper. On deck circle, we'll say, use your baseball terminology, how not to keep up with the Joneses. And I think that's one of those superpowers. If you can figure that out early enough, you really do set yourself up for success financially. And that's the key part to building financial independence, is not letting the compulsions and the overspending overcome you. Build these strategies so that you already have financial independence on front of mind and not where you're behind because you have so much debt.
And not only do credit cards allow you to spend more of your money, they're also not all free, right? I mean, there are some fees, and that's another one of the big cons that we talked about in show prep, is that they're not always cheap. They're not always inexpensive. And so that's something you kind of take into account. You had mentioned some fee information.
Yeah, so there's two separate types of fees that we were talking about. One of them's a transaction fee. Right. So a lot of places you'll go in, because obviously the credit card companies charge the retailer to be able to use those credit cards. So what the retailer do will upcharge what they're selling if you could pay cash and get it a little bit cheaper, that product, or they just upcharge it to you on the credit card. And some of them even have minimum payments. So I was in New York, and I see this a lot more in big cities than I do in smaller towns, but I was in New York a couple months ago, and I was at, lining up to buy something, $6, got my credit card out, he swiped it, he was like, oh man, we have a $10 limit.
Oh yeah.
Well, I went ahead and just bought something that cost $4. So basically I just overspent, by almost 50% on that product that I actually wanted.
It's a brilliant business plan.
It really is.
Because I guarantee you the majority of their transactions are between $6 to $10. Yeah. So how do we squeeze the margin? Make the minimum transaction $10 on our credit cards. You automatically have increased your revenue by 40%.
Right.
That's brilliant. We'll leave it at that. But it is one of those things where the fees can add up. I mean, so don't. And I think that also we just bragged about all the rebates, all the cash back. Don't let that stuff influence your behavior where you're in opposition to deferred gratification or the forced scarcity concepts that we've talked about. And then you'd mentioned annual fees is another one that you have to be mindful of as well.
Some of the cards that offer those big sign-on bonuses that we've talked about a little bit, they also come with an annual fee. And you might get lucky and they'll strike it for 1 year and give you 1 year, but then it's $100 every single year to hold this card.
I can give you a case in point is that Bo and I both had the same rewards card from Fidelity.
Which is a great one, by the way.
We'll talk. Don't blow the turn here.
We got
to save a little bit on the back end.
I'm just saying it's a great card.
So I got the version that had an annual fee. I think it was $200 a year. And then you got the free one. Your free was much better. Because that 2% back, it's not like you didn't get the 2%. Right. The only thing I think I got was when I went to airports, certain airports had a travel lounge I could go sit in and get a free bottle of water and a beer or something.
And you know what's awesome is every time that I flew that year, I flew with you. So you know who else got in the travel lounge? This guy right here.
The problem is it wasn't worth the $200. It would have been cheaper. Those are some expensive beers. I mean, I'll just tell you. And and all it did was require me to cut down a few more trees because I was getting the free newspaper and magazine that they offered me because I felt like I was paying the annual fee, so I had to. It's not like we travel a ton either, so it didn't make sense. So I want to kind of change gears and talk about, are there any behaviors that you can do? And Carter's already kind of given some thoughts on this to ensure that you're using your credit cards in a financially healthy way. And this will, all my friends who hate credit cards, who are writing their hate letters right now, will at least like that we give these strategies to help you keep the rails up to make sure you're in a good place. So the first thing is you talked about this, Carter, is that is to make sure that you don't spend money with money you don't have.
That's right.
I mean, that is the key part. I come from an accounting background, and I always talk about that the average consumer, when you have $16,000 of credit card debt, these things are more like a check kiting scheme. And if y'all don't know what a check kiting scheme is, that's when you really don't have the money to buy something, so you write a check. And then in the time that you're, that person, usually it takes a business 2 or 3 days. But this is back when you used to have floats.
Right.
2 to 3 days to take your check to the bank. You go and you deposit a check from another empty account.
Right.
To try to make this game where you're basically
Just
frauding out of
money.
you're spending money you don't have, hoping that the timing works out for you, playing off of the float. Well, that's what people do with credit. They don't have the money, but instead of being disciplined and waiting to catch up to where their spending should be, they'll just do it on a hope and a prayer, and then the interest starts building. Because what's the interest rate on a credit card is like 14 to 22, 23%.
Even more than that sometimes, I think. I mean, it's a lot.
Compounding interest can be your best friend, or it can rip the rug out from underneath you if you're paying 14 to 24%. I mean, let's face it, that's horrible. Also, we talked about, you said you set some credit alerts. What do you do? Is that just through Mint, or do you do that through the credit card companies?
So most credit card companies, the Chase card, we can talk about that in a little while, but they will allow you to set up balance alerts. Okay. So anytime you hit 200, 300, 500, whatever that number is, you'll get a text, email to let you know where you are on that credit card, which is a great way to know, sometimes you purchase something that's $200 and you'll get hit, but it's worth the hassle and the annoyance of having that balance alert to keep you in check.
A lot of people, I made this mistake. I think the older I get, the more I'm willing to confess my mistakes, so you guys realize how mortal I am with my finances as well. I can remember when I was buying my second house, I had this crazy notion that if I lowered my credit limits on all my credit cards, that this would somehow look better to the credit agencies, because I was trying to push my credit score up.
Young Brian Preston must not have listened to that Money Guy episode.
I've gotten, you know what wisdom comes from? Experience. And that's the truth of the matter. So here's the problem though. So that's why I like Carter's suggestion of using the notifications. And now that we all have smartphones, you can have the text come directly to you so you know where you're on the spending limits. But is that you don't want to lower what the outstanding credit limit is on your credit cards, because that looks like from a debt utilization level.
Actually
when
hurts
you lower your credit limit, now it looks like you're using more of your credit card. So if your limit is $10,000, but you think you're going to outsmart the system and lower it down to $5,000, so it looks like you have less debt out there to the mortgage company and the credit rating agencies. But you're keeping $2,000 a month on your credit card, or you're paying it off, and that's just your cycle to have $2,000. Now, I mean, think about that. You were at a 20% utilization, but now you're at 40%. That's right, yep. I mean, that's a disaster waiting to happen. So just be careful using some of those strategies where you think, I'll take some credit off the table and I will be happy. And then another thing, I think a lot of people make the mistake. When I was looking at your credit score, Carter, you were crazy enough to kind of let me see. And by the way, it's really good. But we looked at Credit Karma. The only red you have was how long your credit was. And they're going to haunt you with that for a long time. Credit card companies, they make you feel young for many years. But it is one of those things where you have to be careful shutting down that first credit card. My first credit card out of school was a Six Flags credit card. Because, that's what 23-year-olds need to be doing is going to theme parks.
That's right.
So I had a Six Flags. So as I got older, it probably didn't make sense to keep getting the 6, but I didn't close it. The cool thing, and we're going to get into brand loyalty in a minute. I'll tell you what we did at that point, but I did not close it, because if you close that oldest credit card,
it hurts.
It makes your time with credit look much smaller. Sure. So be very mindful.
And a lot of times, unused cards for so many years. So our college cards that we had, I got hit with that, and that's one of the reasons you saw my red mark was that it automatically closed, and they didn't even let me know, because I've been at 5 addresses since then.
This is something I've never done, but when you and I talked about this, I was like, I ought to probably do that, because I don't know how credit card companies set your due dates.
I think it's based on when you apply.
Is it?
I think
it's not. They don't have this, because I'm such a skeptic. I just assume they're like, man, when is this guy probably gonna be the brokest, so we can get some extra transaction fees out of him? Because it feels like to me sometimes, especially younger years where money wasn't exactly plentiful, it felt like they were trying to hit me when they knew I didn't have a paycheck coming. So what's some strategies if you don't like when your credit cards due?
So you can request that the credit card company move your due date for your credit card or your statement date. So if you're like me, we can talk about in a minute, when we pay off our credit cards, you can get those dates manipulated, potentially. They may or may not decline you that. But that allows you to, if you get paid on a certain day, bi-weekly, monthly, however that works, set it at a time where you will be flush enough with cash to be able to make that payment.
And we're all human, so we make mistakes. This wasn't in our show notes or prep talk. And you can only get away with this if you only make one mistake probably every year. If you get stuck with a late payment fee or an interest charge that you felt like because your payment came in 2 days after the due date, you can call and they'll usually wipe that stuff away. I mean, that's my experience.
Second best answer you get is no, so it doesn't hurt to ask.
So I throw that out there as just, it's not necessarily a safeguard, but there are some do-overs if you're a good customer, because these people know, and you're going to talk about in a minute how you look at one brand and really are loyal to that brand. Those credit card companies know that is going on out there, and they want to reward you. I mean, let's face it, these guys, when you think about, because I can't remember the number, maybe you do, Carter. It was on the same thing. If there's 1.6 billion credit cards, what was the revenue?
In 2006, which is the latest statistic I could find, they earned around $90 billion in interest.
So if you do the math on that, it worked out to be like $55 a card of revenue. Now, I'm a cashback guy, so I'm pulling money out. That shows that these guys are making lots of money off of some of these people paying 24% and so forth. So they have a little bit to give back. So you can call and ask and get those fees reimbursed.
So we talked about the good things. We talked about the bad things. We talked about some safeguards. Now let's talk about some optimization.
Yeah, let's kind of get into cashback versus travel. I don't know if this is like cats versus dogs, but it's definitely there's two households here.
There's two camps for sure.
So Carter, give us an overview of cashback versus travel cards.
So as the name suggests, cashback cards purely give you cashback, and that can be in the form of a statement credit or cash, or in some instances you can go to the store and they'll give you greenbacks, once a year. So there are places to do that. There's also hybrid cards that are a mix between cashback and travel. And then there's pure travel cards. And the travel cards normally have a point system attached to them. And we can talk about brand loyalty, but those points differ by company and values and things like that. So that's sort of the main differences between those three.
Well, what's one better? That's what I really want. If I'm sitting there listening, should I do cashback cards or should I do travel cards?
And that's what we'll get into that. But here's one of the things. I think that society is changing in some degrees. I mean, so if you're a young person and you're king of the road, you don't actually fly all over the place. You're doing a lot of road trips. Sure. And then think about now when you go and stay someplace, like I'm going on a trip in the next month and a half. We're staying at an Airbnb or a VRBO. Yeah. I mean, it's not like we're staying in a hotel where, where Hilton points are going to be what gets me that place to stay. Right. It feels like things are changing.
They are. The way that people purchase their travel is changing. The way the brands that are out there are not necessarily the same stodgy old brands. There's different companies doing different things.
So if you're one of these people that you are staying in the Airbnb, the VRBOs, and you don't fly, what's a travel card even going to do for you? Mm-hmm. I mean, in those, it definitely pushes the needle over to the cashback a lot more.
So what you're saying is whether a cashback or a rewards card is better for you depends very much on your own personal consumption. Depends on your unique personality and your unique lifestyle, right?
what are some reasons people should consider cashback? I mean, travel. And then let's talk about what some other things we know the market's changing for travel and the fact that way we do travel, but is there also some changes going on with travel cards? But first, before we pick on travel cards too much, tell us the people that should do travel cards.
So if you travel a fair amount, travel cards can be good for you. If you travel for vacations or for business especially, you can get business travel cards and rack up those points. And you can get value out of that where you never have to pay for a Southwest flight or a Delta flight. You can get to that point. But for the majority of us, I think, we don't travel enough to take the time and effort to find the flights available with the travel points. So travel points are also different for different flights, how many seats are left on that plane, how many hotel rooms are left for that night. So the variance in travel can make a huge difference. However, if you are spending lots of money on travel or if you travel a ton, those can be very valuable as opposed to cashback.
The two things that came to my mind when we were talking about this, Carter, where travel cards really give you big bang for the buck, is those initial sign-ons.
That's right.
Are huge. I mean, here's the thing with a lot of these travel cards. If you're talking about a hotel card, I know I'm guilty of signing up for one of these travel cards, a hotel card, and I got an entire vacation stay like at Disney World out of this thing. And we've done an episode on that where I used it. So that's a powerful thing. Airline cards. They not only load you up where you have enough to, you probably can take the whole family of four on a vacation, but then they give you, if you reach certain spending goals, they give you like companion passes and other teas. There's the positives with the travel cards is those initial sign-ons and then those annual bonuses that the sweeteners that they give you. But you made a great point, Carter, when we were talking about this in prep, is that there is the peak moment of maximum benefit for a lot of these travel cards is the day you sign up because they give you that huge sign-on bonus, but what happens in the following years?
So a lot of times you get the huge sign-on bonus if you spend that minimum amount within so many months, and then they even waive the first annual fee, for the year. So if the card costs $95 a year, they'll waive that. So you're getting 50,000 points or whatever that number is, plus you're not having to pay for it. However, you go on that trip, you have your fun, and then next year you're not only hit with that annual fee, but you're also not getting that huge bonus sign-on. You might get a smaller bonus potentially, but you're not getting that 50,000. So it's not like you're going on a trip every year with those points.
It gets less and less.
You have to spend a lot of money on that card.
It's a declining benefit potentially, unless you are, like Carter said, using a lot of travel. It potentially becomes a very declining benefit because I'm guilty. I have both an airline card and I have a hotel card, and I got that free vacation at Disney the first year on the hotel card. And then we got one trip out of the other one, but we've never had enough travel to where I've gotten the free companion pass. We've never, and then that second year, I will say for my hotel card, I love the second year that I was still like gold status because we had enough through the bonuses and other things that had a carryover for the following year of gold. But year 3, now that I'm down to silver again, I'm kind of like, I don't use this card at all anymore. And that's a concern. That you might have a declining benefit. So you really need to know if this travel card makes sense. And you
also want to be wary about the gimmicks that they provide. So Bo can go out and get a $50,000 bonus point on that Southwest card. Well, he'll spend it up in year 1, and then he'll see Chase is offering the same thing on their side, and he can go get that credit card as well. So you really need to watch out on getting too many credit cards at once. We'll talk about that, but also stacking up those annual fees because that can add up to real money.
I think that is the chasing. That's the entire industry is set up in some aspects to load you up with a bunch of different credit cards. And you have to be careful from not only, we talked about credit utilization, we've talked about age of credit, but think about how many hard inquiries you have on your credit card. You're only supposed to have no more than 2 every 2 years. So if you're chasing credit cards to get the maximum benefit, you might be undermining, because you're really not going to do a ton. You don't want to have 15 cards in your wallet.
That's right.
In your wallet. So it just doesn't make sense. And tell us some things that have actually been going on within the travel industry of what they're doing that has kind of diminished this value a little bit more too.
So we all know that a lot of people are playing this credit card game, right? They're signing up for wallets of credit cards, and they're utilizing the points that are available to have discounts on travel. And so, to some extremes, people are traveling around the world for something crazy like a couple $100, first class, all those kind of things. Well, the airlines and the hotels are catching on to that.
Right.
So what they have been doing consistently over the past few years is devaluing their point system. So your hotel chains, your airlines, they all have the different point systems. Well, they get to determine how they value those points. For example, in the airline industry, a lot of times the companies are now charging, so they'll have a base rate for domestic flights, whether that's 45,000 points. Well, now they have the opportunity to increase that at any moment as much as they want.
Right.
And they can also say, if there's only one seat left on the plane, 100,000 points. They can change and manipulate that. So it's becoming harder to find those deals. On the hotel side, many major hotel chains, they rank their hotels by category. Right. So category 1's the lower tier, category 5, 6, 7, the fancy hotels. Sure. Well, the lower tiers are less points. Well, what these chains have done is they've had, for example, last year, one major hotel chain, I won't say the name, had around 1,000 hotels in their category 1, 5,000 points. This year, it's down to less than 100.
Oh, wow.
So they're upping the categories of their hotels with no major, there's no changes to the hotels just to devalue their points. So you really have to watch out for that.
Before we move on to cashback cards, because I know everybody's probably thinking, wow, these guys are really picking on travel cards pretty hard. You had a point system where you said this is how you can tell if it makes sense, like on a flight, if you should pay cash or versus use reward dollars for the flight. What was some guidance on that?
It takes a little bit of research. So depending on which credit card you have or which airline you're flying on, you want to take the points and divide them into the dollar amount that it would actually cost to fly into that. So however many points it takes to make that flight and however many dollars. And you need to decide for yourself if that value, 2%, 3% for each point, is worth, the effort that it is to use those points. I know you were talking about that pre-show as well, about you using points.
Yeah, I mean, it is one of those things where I think that if you can stack stuff up, and here's the key thing, because I think let's go ahead and throw some cold water on these travel cards. I'm just going to go ahead and say it, and it's our show, so we can be. And plus, I love dialogue, so maybe some listeners will leave us some comments on YouTube or something. Is that your cashback cards bear a lot of the same similarities of ability to be turned into travel cards.
Right.
Whereas travel cards don't turn into cash cards. Mm-hmm. So what I mean by that is that you have the option, if you build up enough rewards with a cash card, that you can say, do I want to take the cash that these have earned, typically, hopefully 2%, is kind of the baseline of what you're trying to get. Or is there a way I can transfer this to redeem it within the credit card portal that makes this worth 5%,
right?
Or more, or something like that? You can do that. The only thing you give up by using your cash back as a travel card is maybe you don't get those annual little sweeteners that the actual airline or the hotel gives you automatically, like the free Wi-Fi or the free newspaper for the hotel or the companion passes if you get so many points. That stuff goes away, but you might find you can still buy your flights at an accelerated rate, even with a cashback, if you just transition them over to the travel side. Whereas, like I said, that travel card doesn't turn into cash. And you find, here's the other thing I will say, is that as ninja shopping skills, I love the gamesmanship you can do, and travel is one of the easiest ways to get discounts because all the travel sites, whether it's Priceline or each of the hotel chains and so forth, usually have something like a 3%, maybe even greater 8% on sometimes when they're running specials, cashback options that you can get through the portals as well as the bonus points if you're bought through the credit card portal. So that's why that cashback monitor is such a powerful thing, is that if you're using points, and as Carter said, they're diminishing the value of those points, you might be giving up something there. So that's why I really lean heavily on the cashback cards. I mean, I really like the cashback cards. Did I miss anything else on talking about, because I know we spent a lot on travel and then we come in and we drop a hammer on it and say, I think the majority of people would probably benefit from a cashback. Is there any points that we should probably add on that, Carter?
No, and I think one of the keys is when you say travel card, most of the cards are branded to a specific travel company, Southwest, Marriott, different hotel chains, places like that. The cashback cards are mostly independent, your Visas and your Chases and those type of things. You can get the travel / cashback hybrid cards when you go to a Visa, Chase, Discover type company. So I wanted to make that clarification that travel cards normally are the hotel, the chain cards.
brand specific.
Right, that's right.
Sure. And that's because also what I like about the cashback being turned into the bonuses, if you want to go on a cruise, guess what? There's options out there in these credit card portals. If you want to go on a flight, if you're going on a all-inclusive, if you're going to Disney, there are options on all these different things. Whereas when you're brand specific, you're kind of railroaded into one line of thought. So let's talk about, you talked about loyalty, Carter. And I didn't, when I saw the show notes, I was like, loyalty? What the heck is Carter talking about with loyalty? Walk us through why you are somewhat loyal. And then what's funny is, as you explain this to me, I was like, man, I fall under that too. So give us some guidance on what you mean by loyalty with credit cards.
So loyalty is using the same family of cards or same family of companies to you maximize your points or your cash back. So, for example, can I give specific companies' names?
Well, and let me give this disclaimer before you do this, because I always get nervous because we don't like to talk about products on the Money Guy Show, but I think it is perfectly fine if we mention things that you're using. Just to give an example, we're not endorsing, because a lot of credit card websites get kickbacks. Sure. You'll see they get, it must be very profitable to have people sign up for a credit card through your portal. We don't do that stuff. But I do think it's important for illustration as well as education purposes if you share examples and mention some specifics. Yeah. But I want to give the disclaimer that this is not an endorsement. So go ahead.
Okay. So my family is loyal to the Chase family.
Okay.
And the reason that we are loyal to them is they offer multiple cards that have different point values depending on what you're purchasing, right? So Chase, for example, will also have a cashback feature as well as a travel point feature as well. So we have 3 to 4 cards that, depending on what we're buying,
all inside the Chase
family to maximize the value. So while one card might offer this quarter, and then gas could be this on another quarter. So different values for what you're purchasing. Well, you can combine those points for cashback or for use in the travel portal. So multiple cards and being able to maximize the value within that one company is one of the reasons we're loyal.
Sure.
And also on their end, you can partner with the travel cards. So for example, in the Chase family, if I want to go on a Southwest flight, I can just take my Chase points and transfer them to Southwest on a one-to-one basis and get the same benefit that you would get with the Southwest card from the Chase card, because it is a Chase card as well. So part of that is brand loyalty, but also the availability to go with different partners.
The example I wanted to share was, I told you that my first credit card was a Six Flags credit card. A lot of foresight into that. I'm sure with 23-year-old Brian getting his first, credit card for Six Flags, wasn't thinking, what in the world is 40-year-old Brian going to do with a Six Flags credit card? But here's the good news. And this is why I think loyalty and at least having options with some of these big banks, because we could, you said Chase, but we could very easily have said Capital One or Discover or even Citigroup. I mean, they all have different product lines. My Six Flags card, what was funny to me is that when I called, fortunately, I got a hold of a really good customer service rep when I called to cancel my Six Flags credit card. Because I did, like I said, wisdom comes from experience. I called to cancel my Six Flags credit card, and then the representative said, look, you don't want to cancel this credit card, especially if it's one of your first ones. Why don't we just transition it to a different credit card? And fortunately, the Six Flags card was in the same, it was Chase. So I was able to get the Cash Rewards Plus, which has turned into the Ultimate Rewards card.
Right.
And that worked out great. So I think having that flexibility, so as your life changed, as it evolved, I didn't have to take away my longest credit history, and I was able to evolve into a different card on the same family platform, and it didn't look like I did a brand new card.
Sure.
So that was a really powerful thing, and why having loyalty kind of paid off on that to a degree. And here's a benefit we didn't even mention, because I've mooched off of some of you guys, is that some of these credit cards, like if you want to go see Foo Fighters, if you have a certain credit card, you'll get access to tickets beforehand.
Access, yeah.
I mean, poor Gabe, I had to totally mooch off of his Capital One, I think, to get my Foo Fighter tickets. So, I mean, there are some benefits to that, but loyalty can come into play for sure on some of those transitions. And then, but just understand that those rewards you have to pay attention to. And let's talk about the kind of the cashback game here a little bit. I want to kind of talk about how you maximize this strategy. Should you, Carter, here's the thing that I think people will grapple with. Should you have cards that are good at a bunch of different like have one card that's good for your restaurants, have a card that's good for gas, or should you just be a generalist? How does this work?
I think that's a personal decision.
So how do you figure it out?
So our family, to keep the example going, is we use a 5% cashback card, but it rotates quarterly.
Right.
So whatever's 5% that quarter, this quarter I think it's gas stations.
Okay.
So you know for a fact it is, because that was going to be my next question: is how do you know what your bonuses are right now? What the rotating for, say, Discover or Chase with their ultimate rewards? I mean, do y'all know the bonus categories?
Just for Chase is all I know.
So I'm just going to be honest. I've got two little ones, and so all of my days kind of blur together, and I don't even know which quarter it is most days. So I can't remember that. So I personally don't have a rotating quarterly card for that reason. So for my family, it didn't make sense to do that.
And that's the point I'm trying to make, is that I think you get to – now I will tell you, I know Discover Card from October through December, Amazon is 5%. I mean, it's just that one is ingrained because and we're going to talk about in a minute. There's even that might get usurped here soon. But it is one of those things where I think most people aren't paying attention to the categories.
Right.
And I think the credit card companies kind of count on it. They love to market off that, hey, you can get 5% back on these categories, but we're going to make you jump through 3 hoops. You have to not only is this, it's not automatic either. That's the thing. If you want to know what annoys me about credit card companies, they have these rotating categories. But it's not automatic that as long as because you might, incidentally, you're going to get 5% back in these. They make you go sign up every quarter.
Right.
Why? Why do you have to go sign up? I mean, I would like just accidentally get 5% on maybe gas or groceries in these months. But no, they don't want to give me that money. They want to make sure that you have to be proactive. And that's why I will tell you, I play this both ways. And here's a reason. I am nerdy enough. I know which cards will do which things. So I have a card that gets me 3% back at restaurants. Mm-hmm. I have a card that does 4% back on gas.
Right.
And I maximize that. I get so annoyed when I find out my wife did not go get 4% on our gas. But I also love my wife very much and know that she's not changing her behavior. So we have a 2% generalist card that just gives 2% back. And if you're going to have a good, healthy marriage, you just know, honey, this is the card you use.
That's right.
And you level out. So if you look at your personality and you look at your household, because you can be in the same financial household, but have 2 members that have completely different financial personalities. We see it day in, day out with our clients. Do the structure that works for you.
Sure.
And that's why I have 6 different cards in my wallet, 7 cards. I'd have to go count them out. But my wife has like 2.
Yeah.
And some of them I don't love it when she's using the one because, with the mouse ears on it, because I'm like, just because we're going to Disney this year doesn't mean you need to be using that Disney card for everything. But, I can't control that behavior. So I think you have to look at, should you have a generalist card or should you have a very specialized card? And if you are going to be specialized, make sure you're proactive to keep up with things.
Absolutely.
So let's talk about also, because there's a curveball we've come out recently with. Let's talk about store specific cards.
Yeah. These are have become much more attractive, I feel like, than they once were. Because used to, you go to the mall and you have a purchase, say, hey, you ought to sign up for our credit card. We'll give you 10% off this purchase.
Gosh.
And I've had to have some conversations with someone in my life who I love very much about why that's not always a fantastic thing to do.
Yeah, that 10% gets paid back very quickly when the other spouse doesn't know that credit line got opened and you have a late payment as well as just not paying and the interest. I mean, you pay that 10% back like that.
But the store cards have changed a little bit. I mean, there are 2. Are we going to talk about the 2 specific
Yeah,
ones?
I think go ahead.
Yeah, so there are 2 cards that I use. Number 1 is Target. There's a Target right close to our house, and it is 5% back on every purchase at Target. We actually did a show a couple of years ago. We looked at grocery shopping across a few different grocery stores, and one of them was Target using the 5% red card. And it makes a lot of sense because you get that. The other big one, and this is a brand new one that just came out, was the Amazon Visa card.
The Amazon Prime card.
It's the Prime card. If you have a Prime membership, it's a free card. You get 5% back on all Amazon purchases. So if you have smiley boxes showing up at your house all the time, it's huge. And if you're someone who really likes to eat super healthy and whole, if you will, and you shop at Whole Foods, you get 5% back on all your Whole Foods purchases. So in my household, that is a pretty powerful benefit.
So instead of paying 20% more for your groceries, you pay 15% more.
That's kind of where we're at. Sorry, Whole Foods executives who are listening.
Hey, look, they know my name. I mean, I can't control the behavior of that other person in my house. We shop at Whole Foods, but me, I'd be like, just go down to the store and just go whatever. But it is one of those things. I think if you're going to Amazon Prime, having that 5% is pretty powerful stuff. Right. So I think it's definitely worth mentioning.
And then the other specific one, but it turns into more of a generalist card is, and I think we mentioned a few times, the Costco credit card. That's another big one that you do get cash back at that store specifically, but there's also some fantastic benefits for filling up gas, for going to restaurants. It's another great store. I'm just going to tell you guys exactly what my credit card, portfolio looks like, and you can just benchmark Bo.
Tell them how the cash back works with the Costco specific card.
What's cool with Costco is, you get 4% back on gas purchase, 3% at restaurants, 2% at
it's 3% on travel too.
3% on travel. And so what you do is you accumulate that throughout the course of the year, and then magically one time a year, I think mine happened in March. Does everybody's happen in February, March? So I got an email saying,
hey, because I just did mine in the last few weeks.
Next time you go to Costco, here's a couple $100 for you to go pick up. You walk in, show them the email, they literally give you cash. You walk out, and
it's legit cash. I mean, because that's when I was there. I thought I wanted a check. I said, hey, can I get a check for return this in for my check? And he calls the store manager over there, and we're standing there for like 3 minutes because I guess the store manager's getting stamps or something for somebody else. And I was like, look, would it make it easier if you just gave me cash? He goes, it'd make it a lot easier if you'd actually let me give you cash. So you actually
complicated the process by asking for a check.
So cash, they literally give you greenbacks right there on the spot. And here's my Costco thing. I'm slow to learn on certain things. I've never been a Costco member. We move up here and there's a Costco 2 miles from my house. Sure. I love this place. I mean, cause you go in there and I get I get a 6-pound bag of walnuts for my oatmeal and it drives my wife crazy. And then every time
48 batteries.
And then gas is at least 60 cents cheaper a gallon at Costco than it is everywhere else around here. And maybe it's because of we're having to put nicer gas in the car, but every time I drive my wife crazy because we usually go right after church, which is the worst time to go. And she's like, is it the 70s? Is it the early 80s? Because the gas line at Costco, because it's 60 cents cheaper, looks like Jimmy Carter is still president. I mean, because they have them lined up around the building to wait in line for gas. But it's just like Chick-fil-A. I'm going to wait in that line, even if there's a line, because they're going to move it on out. That's right. Okay. We all know our duties. But I do like having cards that function to maximize, because you feel like there is something, money just feels better when you know that it's going 5 to 10% further than your peers. And that's what we're trying to do. That's why we did an episode on credit cards, is because I want your money to go further than everybody else in your peer group. And that's what, if you play this right, if you don't find yourself falling prey to the consumerism where you treat this money like it is cash, there are some benefits here. So, Bo, walk us through, and Carter, I want you to kind of chime in too, with how do you keep things organized, and what's some resources that we could do so people can go to moneyguy.com or go on YouTube and actually make sure that they're maximizing these strategies.
Yeah, you found some great resources in your research. Why don't you share some of the websites that you've found?
So NerdWallet has a huge section based purely for credit card.
I will say. I mean, you go in on this website and you can get as specific as I like to grocery shop on Wednesday and they have a category for on which card would be best. I mean, they even have students. I mean, if you're trying to build credit, talking about having this thing categorized, they had it.
Based on your interests, you can kind of narrow it down to the few 3 or 4 cards that they think are best for the goal that you're trying to see. So I think they do a really good job of narrowing it down. You can also go to NerdWallet and figure out how your card stacks up against other cards for the same purposes. So if you have a card and you don't know exactly what it does, and you don't really want to look at each website to find out what other cards do, you can kind of compare and contrast your card to what other benefits other cards offer. I mean, they have a jam up, section.
Another thing that you had mentioned on here is you just have to be careful. So if you are someone, you're like, okay, you know what? I'm changing my credit card roulette. I'm going to go out to these websites. I'm going to sign up for these cards. I'm going to optimize. be careful on the timing of how you do that. Because remember, inquiries matter. So you don't want to get into this tizzy where you go shut down 15 credit cards and you open up 15 new credit cards. That's probably not the best approach to take to start tweaking some of this stuff. But if you do have some cards that you use, go check out some of these resources and make sure you are using the top end class. Because if you're not, you can improve your situation for sure.
I do want to give a cautionary tale about, because this happened a few years ago. I mean, we haven't done a credit card episode in a long time, so bravo, Carter, for bringing this to us, doing a great job of show prep with us today. But we have had this happen in the past where, because the credit card industry is so consolidated now, we've talked about the great deals you can get with certain card companies, and people who are right on the border with their credit scores go and apply for a new credit card. And just the fact that they applied, it distressed their credit score enough to where it put them in peril with if they already had debt and it wasn't paid off, they found that their rates went up. I mean, remember we've had listeners write us where their credit card with the same bank, but they applied for this one that had better rewards. Because they applied, it lowered their credit score, that it imperiled and caused the rate to go up on this credit card over here. So there are some unintended consequences. So if you're one of those people, you might need to make sure you have the financial household in order before you're worried about optimization strategies with your credit card. If you're a person that you are sitting there with $16,000 a monthly credit card debt that is paying between 14 to 24%, don't go and try to figure out how you can get the best travel or cashback reward. Let's figure out how we're going to get this thing paid off so that your credit card is paid off monthly.
That's right.
That's what success is with credit card management, is that you are, as Carter suggested, actually turning cash to where it has additional benefits. You're not using credit card to help you layer and make it a month where you're borrowing off of the future to have success today. That's not success. That's called faking. And that's not what we're building here at the Money Guy Show. We want you to go beyond common sense so that you can have that army of dollar bills that is working just as hard for you, if not even harder, so you're not using your brain, your hands, your back. We want your money working for you. So definitely go check us out. MoneyGuy.com. Go out to YouTube, because like I said, 100,000 views, and this thing is picking up speed. We're hoping we do a 50,000 just this month alone. It's kind of exciting. And this thing started in August. I mean, this is what's crazy, is we started doing YouTube in August, and now we are doing volume that is getting very close to where we are with the podcast on a monthly basis. And we've been doing the podcast since 2006. So go check out this new media that we're doing. We're putting a lot of effort trying to make sure you guys, we're coming before you in the area of where you like to consume us the most. So if you're driving, continue to do the podcast. But if you're one of those visual learners, because that's where we saw a positive remark on the YouTube.
That's right.
Go out there. We have resources for you. But going beyond common sense, we are your guide. Carter, man, thank you so much for giving. I mean, we loaded this thing up. I hope you stayed with us. And, if you're coming down to downtown Franklin and you just want to tour our office and also meet the team and meet some more of the financial mutants that we have on the bench, come by and see us. MoneyGuy.com. I'm your host, Brian Preston.